Hey traders, hope you all having an awesome weekend. So an update here on nat gas, gold, silver and crude oil. But before that, as always, over the weekend, I want to give you something valuable to learn. I want to give you something to learn that will help you to understand trading in more depth and that will help you to take a better trading decisions rather than just relying on blind signals. So in this weekend's video, I'm going to show you all the trades I've taken one by one. I'm going to show you all my winning trades. I'm going to show you the losing trades as well and how I managed to cope with my emotions, how my stop losses hit, and then I managed to get another better trade. Every single thing that happened last week, that is what I'm going to talk about in this video. And every single entry which I'm going to show you is the ones I talk about in every single video here on my YouTube channel. These entries are not an alien for you. You hear me talking about these entries every single day in every single video. So that is what I'm going to show you with the exact pattern, so that you also understand that in trading it is not impossible to make money if you follow some rules, if you stick with the rules and if you follow your trading plan. So if you're someone who wants to skip this part of the video, you can always skip it to the timestamp. But if you want to listen to this part of the video, trust me, you're gonna definitely learn something out of it. So in trading, number one, it is very important to identify the area of value, which is right here, the supply zone, or you can call it a resistance area, a demand zone, or you can call it a support area. And number two, if the price is in between these areas, what we're going to do, we're going to take our entries on smaller time frame like 4 hours, 1 hour, or if you want to go down to 30 minutes, you can do that as well, but you need to mark these zones on one time frame higher if you want to take an entry on smaller time frame. So these two factors are really important. And what I personally do over the weekend, I mark my zones, I refresh my zones so that when the market is open, I can able to spot my reversal trades from these areas and I can able to take my trending trade, which is a pullback trades in between this area of value. Now the pullback trades depends if the price is trending lower. I take my sell bearish trade, pullback trades, which I'm going to talk about in a moment. If the price is trending higher, I take my buy trades until the price hit the level of resistance. So that is what I personally do. Very simple. Trading should be simple. It's not like you mark thousands of lines, thousands of support and resistance area and try to spot wrong entries. Mark the major zones, something like this, and plot these two EMAs, which is 20 and 50 EMA. That is what I do. If you want to do it, it's totally up to you. And then I look for a trending market. If, like I said, if market is trending lower, we take a counter trade from the area of value. If the market is trending higher, we take a counter trade from the area of value above, and that is how we need to do our analysis. Now these are the entries I talk about every single day, and there are other entries as well which I can't explain in a single video, and that is what my students are learning in the MMTA full course, and I don't want to confuse you. I only want to show you these entries that I talk about every single day. So let's start with first pair, the first entry I took right here. So what do we have? This pair is trending higher and also trending above 50 EMA. So if you remember, I've said that I keep on taking longs until the price hit the area of value. Now at this point, I entered my trade here, and this was a trade alert I've sent to the members as well. Now that trade was unfortunately a stop loss hit. If you see, it was just a few points away. It should have hit your stop loss with a spread. It hit my stop loss, but what do we have after that? Now after hitting the stop loss, that was a shitty feeling, of course, but I was still looking for a possible entry. And what do we have? After hitting my stop loss, immediately I got a next candle as a swing low bullish engulfing candle. Now exactly the same pattern is right here above 20 EMA, and exactly the same pattern right here that happens above 50 EMA. So why not take in another entry? Yes, if this trade was running and if my stop loss was here and if I got this entry, I wouldn't have taken this entry, because if my trades are running, I don't re-enter the trade if I see another condition. But after hitting my stop loss here, I got an entry here, and here I entered my trade. Now if you see, a 29 pips of stop loss has been hit here, and this trade I've decided to manage it. And how I managed it? I managed it till a recent level of resistance right here, and price even pushed up 20 pips after that. So if you look back, I've marked this zone already right here, and I've decided that if the price hit this zone, that is an area from where I will exit my trade, because there's a likely chance the price will fall back down with this bearish engulfing pattern, and we had a big pullback after that. So that is how I managed to take this trade, and that happened at 2 p.m. on 18th of September and gave me a good amount of 79 pips profit. So that is how you don't get panic after your stop loss is hit. I did not take a revenge trading. I was calm, got another condition, and this condition happened after 1, 2, 3, 4 4-hour candles after waiting 16 hours. I did not enter immediately to recover my losses. I did not do revenge trading. That is how you need to be patient and calm to enter your trades. I want to show you the next one quickly. Right here, this was a trade alert I have sent to the member as well, and this is one of my best performing pair for the strategy. And as you can see, what we have, the price is trending lower, and after that we had a nice bearish engulfing candle right here, and I used a fixed target because this pair has been acting weirdly and pushing up and down with the wicks, and I did not want to stop out after price hit my take profit. I did not want to manage this trade, so I kept it nicely because I looked back a pattern. It is not exactly a downtrend, it is just a consolidation. So that is why I just want to keep a fixed target, and a target of 25 pips was hit successfully. So after one losing trade, I have a second winning trade. Let's see the next one. Right here, so this pair is trending lower, and at this point, what do we have? We had a price hit my area of value. We had some nice bounce from here, but I did not enter this trade. Instead I got a bearish engulfing pattern right here. So what happens is I entered this trade here. Now unfortunately the price just quickly hit my stop loss and then came back down, hit the take profit, but I was already out of this trade after hitting the stop loss. So that was a heartbreaker because it pushed up and then came back towards my point. But did I get panic or did I get angry? No, that's a part of trading. I've already shown you the first example. After that, I did not do revenge trading. Now, let me tell you the psychology of the trader. If a trader sees this type of move, if he entered right here and price hit his stop loss and then quickly pushed down back to his point, he gets really angry and wants to quickly enter a trade and thinks that the price will now push lower, and he starts selling the price just with the fear of missing out and also with anger and revenge. But the professional traders, they don't do that. Once the stop loss and take profit is hit, you wait and look for the next opportunity. So one stop loss here for 30 pips. Next one, we have NZD Canada. We have been waiting for this area of value from last couple of weeks, and I've been sending these zones to my members from last couple of weeks as well. So last week I've sent these zones to the member. Right here, as you can see on the screen, we have been waiting for this area of value, and I've already mentioned that this is a valid counter trading zone, and I'll be looking to enter possible buy trades on a smaller time frame. Now I want to show you something interesting here. What do we have? While the price was heading towards the area of value, I entered my pullback entry. If you remember at the start of the video, I've said that if the price is trending lower, I take my pullback trades towards the downside. In this case, the price is trending lower in a nice downtrend, as you can see here, and I got an opportunity to enter my trade, and I did not want to manage this trade, and I kept the exact stops and target, the one I used for this strategy of 26 pips. I did not want to manage this trade because I knew that if the price hit my area of value, it can possibly bounce from here. So I took this trade, a good take profit of 27 pips, and then we had a double bottom action right here. Now if you're my student in MMTA, we had a valid condition with this pin bar. I entered my trade here and I kept fixed target of 1.421 risk to reward ratio. That's how I entered my trade from a major area of value. Take profit of 50 pips in a buy trade has been hit. A take profit of 26 pips has been hit on a sell trade. So a good trade waited with patience. Right here, these two are good winners, and that is exactly the condition. I did not enter my sell trades blindly. The price is pushing lower. Because I got a condition, I enter my sell trade. Exit my trade. I knew that this is an area of value. I need to exit my trade. That is how we do an analysis. If you are trading full time, that is something you think all the time. You look at the charts, you make your zones, figure out if you enter your trade, if you have an area of value, you exit your trade, and you always prepare for the next move. And the next move, I was prepared for a possible buy condition. That has happened right here. A good take profit has been hit. I hope you got a good lesson out of this trade, and I hope you try to learn something out of it. Next one, we have Euro AUD. Now this pair was trending lower. I already sent this report to my member as well. Right here. So I've sent this report to my members on 11th of this month. Not last week, before that. So I've sent this to my members that price is trending higher, and as you can see, it is a trend continuation zone. That means the price has broken above this zone previously right here, and it is likely that it will pull back to this area of value and give you a possible bounce. So that is what has happened before. While the price was pushing lower, as you can see, I entered my sell trade with this bearish engulfer that hit my take profit. Then I waited till the price hit the zone. Now, once the price hit my area of value, we had a valid aggressive entry. Now, this trade was a pain. It took so long to hit my profit. The entry happened at 15th of September and the take profit hit after a week. So that was a patience paid off. A good take profit of 123 pips has been hit. That is a reward of being patient and disciplined. I did not get panicked. I did not exit my trade when the price pushes higher. I was about to hit my take profit. It pushes lower. I was in a loss again. It pushes higher. I did not get panic to exit my trade early. I still waited because I already waited so many days. So why not wait till the price hit my take profit or stop loss? Because once you enter your trade, you have made your decisions that the worst case scenario will be hitting your stop loss. And if you're under your risk capital, then you don't need to be scared of, because you have accepted your risk before entering your trades. So a good example of a trend continuation zone turned bullish. Next one, we have AUD CAD. Right here, as you can see, the price was trending lower, and this is my counter trading zone. As you can see, if you look back, a zone from where the price pushed up massively, a nice double bottom on a daily time frame, and now it hit the area of value again. So at this point, I see a nice minor double bottom pattern with this good bullish engulfing candle, and that was my entry, and I used a fixed target of 1.421 risk to reward ratio, kept my stop loss below and take profit exactly fixed. As you can see, the price pushed up nicely, gave me some nice 38 pips profit. A good example of entering your trade from the counter trading zone. So this is not one of my best performing pairs, so that's why I just kept a fixed target of 21 pips. But if you see here, the reason is the price was in a downtrend on a higher time frame. Right here, the price was in a downtrend and I got an entry in a downtrend, so it is also below 50 EMA. But that doesn't stop me to enter my valid pullback trades. But if I look back on 4-hour time frame, I got a condition. If you're my student or if you are following me in priority group, you have seen this type of entries. I got a condition right here, which is bullish engulfing pattern right here. I enter my trade here and I just chose to enter a fixed target of 21 pips. My stop loss was below 50 EMA, and then I only used fixed target, and as you can see, the price massively pushed up. But like I said, I did not manage it. I exit my trade at smaller profit, but that is also one of my winning trade here in Forex. Now, I also took other trades with other strategies which I use personally and which my students are learning in MMTA, which is something I can't show in a single video. But I think these entries are enough for you to become profitable if you follow your rules, if you mark your zones as accurate as possible, and if the price is in between the area of values, look for a pullback trades, bearish or bullish, depends how the market is trending, higher or lower. And then we took another trade, which is AUD USD, a good example of a pullback entry, and also sent in the priority group. So how we entered this trade, the price was trading above and we had a nice pullback, and the price landed right at 50 EMA with this nice swing low bullish engulfing pattern. So I entered my trade here. The initial targets was 1-to-1, which is 26 pips, but then I managed this trade till the recent level of resistance from where the price has recently fall. I did not want to manage it above this level because this is the zone from where the price was likely to react, and as you can see, exactly that has happened. That was also a news event that pushed the market lower. Anyway, I was prepared to exit my trade at this zone. A nice take profit of 56 pips has been made in this trade as well. So the last one, I want to show you one commodity trade which I took is only gold. So as you remember, I've said that I'll be looking to enter my counter trading zone from this area of value. So for commodities, I don't manage my trade. Most of the time, I just use the fixed targets. In this case, I just keep my stop loss below and I just went 1.2-to-1 risk to reward ratio. A good take profit of $13 has been hit. A stop loss was for $10, and that is a good example of entering the trade from the counter trading zone. And as you can see, the price also pushed lower from this bearish engulfer, which was also mentioned in my last video. So this is one of the commodity trade I have took, and that was a winner as well. We're going to do the full analysis of this commodity in the second part of the video. So I hope you have learned something out of it, and I hope this motivates you to learn trading first before you enter in the live market. Without knowledge, without education, it is no point of wasting your hard-earned money in the markets, because you are competing with some of the best traders out there using the best strategies, and all you want some rules so that you can ride along with these people and you can ride along to pull some profits out of the market. So if you're interested to learn trading with full rules and all the other strategies, I have the full MMTA course, which is a premium plan, and with premium plan the standard plan is free for the whole year, and here you will learn every single strategy with all the rules, how to place your stops and targets with exact numbers of stops and targets, how to place a stops and target for commodities, every single thing, how to mark your support and resistance zones as accurate as possible, and how to enter your trade with the counter trading zones. So this is something if you want to look at, we have a video here. If you want to check the video out, see the lessons, how it looks like and what to expect from the course, that is something you have premium plan. But for the standard plan, it is something you get a trade alerts 1 to 4 times a week and some basic rules of entry. I'll show you the screenshots how I'm entering the trade, and the video is linked here if you want to see what to expect from the priority groups. Standard plan is free if you join one of my partner brokers. The links are in the description. I recommend IC Markets and IronFX. If you join them, the standard plan is free for you and the minimum deposit is 1k, but I've reduced it down to 500 for September. And I'll be also adding live sessions here in the standard plan, and the price might go up in next couple of weeks. I'm still upgrading my new website. Once the website is up and running, you will see the link in the description, and that is a website where you will also get the live session. And if you are my student in MMTA course, it is already free for you. So if you join my partner broker with minimum 500 deposit, which is a September offer, you can also able to access my live stream, and that live streams will be only for members, so that you can ask me questions over the weekend, what to expect from the market throughout the week, so that you can prepare yourself to take the efficient trading decisions. A lot more are coming in the priority groups. Once you do that, just DM me on Instagram. You can always email me at support@moneymarkers.net. Right here, if you click on any of my video, right here, if you click here, if you look back, all these links are in the description. So these are different types of account: a standard account with no commission, raw spread account if you are a scalper, and this is a special account. For the minimum requirement for this account is 2k. And then you have a link for IC Market right here. So these are the link you need to look at if you want to join one of my partner brokers. So that's it for the first part of the video, guys. I hope you enjoyed it, and I hope you have learned something out of it. If yes, do not forget to hit the like button for me and subscribe if you're new. So let's start our analysis, starting with natural gas. So what do we have right here? So our price is pushed lower and still ranging within this area, as you can see on larger time frame. So we still do not have any breakout, but I'm soon expecting a good breakout, either above or either below, because it's been a while now since the gas is trading is ranging between this zone, still in an uptrend. So it is likely that we can get a breakout towards the upside, because the price has been rejecting so many times from this area. So I'm expecting a good breakout hopefully in next week. Now let's see how it goes, but let's see how we can trade on smaller time frame. So for now, the price is at the pivot, means the price is now in between 50 EMA and 20 EMA. It's still deciding if it wants to push up and continue to push up, or if it wants to push lower and hit the zone again. So at this point, I'm just waiting with patience. I can still see a good bearish pressure with this 382 candle right here. We have a bearish pressure. If you look here with the fib tool, we have a valid 382 candle that shows the market has a bearish pressure. So it can still head lower and it can still push down to the zone again, which is 2.493. that goes down to 2.419, from where I look for another condition. If we have a buy condition, I will enter another small little buy trade. I won't be managing it. As you can see, the market is still ranging bullish engulfers or double bottom entry pattern. So clearly I'm not looking for buy trades for now, as we are still below 50 and 20 EMA. Buy trades will be only if the price breaks above 50 and 20 EMA, and if the price break above this previous high, I'll start to look for my pullback trades with conditions like bullish engulfers and keep on taking longs. Now if the price breaks above this high, then I expect the price to hit the zone above, which is right here on Oanda 2.961. that goes up to 3.063, from where I look for another sell counter trade with conditions like bearish engulfers or my double bottom entry, so my double top entry condition. That is what I'm expecting from net gas, not entering any trade for the pullback trades for buy above this high. For now, we have a bearish pressure with this 382 candle, and that can still push the price lower. Let's see how the price opens up in Monday. If open below in gap, that is fine. We still have a bearish pressure below 50 EMA. If open above 50 EMA, then I'll start to wait till the price give us a new high above this high, at least with a wick, and then I'll start to look for my buy pullback trades. Only for now, I can see a bearish pressure is rejecting from this zone. Price can push lower to the zone below in green I have mentioned. The price is still ranging. All we need to see a clear trend to take our trades. Here on capital.com, exactly the same. So all I want to see a break above or break below. We have a bearish pressure with this 382 candle right here. If the price pushes lower, break below this previous low, in that case, I'll start to look for my sell trades. Only exactly the same. Here on Oanda, if the price breaks below this previous low like this, then I start to look for my buy sell trades only till the price hit my zone below in green. And if the price broke above, in that case I look for my counter trades from the zone above, which is 3.004 goes up to 3.092, from where we can enter another sell trade with conditions like bearish engulfers or my double top entry condition. So keep looking for conditions for gas. We don't have any condition at this point. All I'm looking for break above or break below for sell or buy trades. For now is still ranging, but in the long term the price is still pushing up in an uptrend. Price is still making new higher highs. All I want to see another high, and then price will head higher towards the next level of major support, which I'm going to mention in my upcoming videos. So the next one we have gold. So exactly the same as net gas. Gold is also in between the 50 and 20 EMA, but still above 50 EMA. All I want to see a complete break above 50 EMA. If that happens, the price will push up and again hit the zone above, a very minor zone, which is 1945.07, goes up to 1951.01. If that happens, if broke above with good momentum, the price can likely hit the zone again and we can get a possible pullback from here, which is likely. And the next buy trade will be above this previous high. If that happens, the price will head higher. Use the zone here. Use the zone as a trend continuation zone to push the price higher to the next level above, which is right here, 1965.65, goes up to 1981.05, from where we will enter another sell trade. For now, all I'm waiting for the price to break above 50 EMA to enter possible sell trade from here with conditions. If not, if the price broke below this low, all I want to see a sell condition till the price hit this area of value right here. We can get a possible double bottom and price will head higher. So keep an eye here. If broke below, hit the zone, keep an eye here in the rejection zone, and I want to see a good bullish engulfer without a candle closed below this low. If that happens, price will head lower. So these are the conditions I'm looking at for gold. Next one we have silver. Silver is above 50 and 20 EMA, so means it is bullish. We have a break above this high. If we have a pullback to 50 EMA or 20 EMA followed by bullish engulfer, then in that case I will enter my buy trades. I will be only looking for buy conditions with the pullback. We are in a process of a pullback. All I want to see hit of 50 EMA, bullish engulfer. I'll keep on taking longs until the price hit the next level of resistance, a minor resistance, which is right here, 24.71 goes up to 25.15. That is what I'm looking at. Not entering any sell trades because price has broken back above 50 EMA, made a new high. All I want to see a pullback with the bullish engulfing pattern. Last one we have crude oil. It is also pushing higher, and in process of a pullback we can get a possible double top pattern, and the rejection zone is 92.54, goes up to 93.02, from where I want to see a rejection, a red candle or bearish engulfing candle, or a 382 candle without a candle closing above this first top. If the candle closes above this first top, in that case we have a signal that price wants to continue to push up and hit 96.00, from where we can expect another bearish condition, and only then I'll take my sell trade. If not, if broke above, I'll look for my pullback buy trades only. If rejected from the rejection zone, then I will enter my sell trade, keep my stop loss above the rejection zone and take profit 1 ATR, then I will manage it accordingly. So that's it for commodities, guys. I hope you have learned something out of it, and I hope you have learned a good lesson from the first section of this video. If yes, do not forget to hit a like button for me. It really helps me in a YouTube algorithm. Hope you trade green next week as well. I'll see you guys in the next video. Have an awesome weekend. Take care.